Up in the stream. There you go. Hey, dude. Hope you guys are having a good day, having a good week. Man, thoughts and prayers to everyone in the path of Hurricane Milton. I've got lots of friends and family in that path. Fortunately, where we live in South Florida, in Miami, we're at the moment in a pretty good spot. Probably the best place we could be in terms of being in the Florida Panhandle and in the path of this storm. We expect to have some heavy rain here for the next few days. We expect to have some wind, but nothing like those that are directly in the path. We're going to get the outer bands here in Miami, but definitely some thoughts and prayers going out to everybody in the path through Florida and up into Georgia and the Carolinas as well. Just devastating what's happened there after Hurricane Helene, and they're getting the 1-2 punch here this week for sure. So without further ado, let's go ahead and jump into the analysis. If you're surprised by, Bitcoin's failed attempt yesterday to break out, maybe you haven't been paying attention. We talked about it and some of the things that were pointing to the fact that might not be a successful attempt, which of course it was not. The good news is it's not all bad news for Bitcoin. So in this analysis, we're going to look at the order book and order flow data and FireCharts as usual, along with some technical analysis to show you why not now doesn't necessarily mean not ever for Bitcoin. So I'll also do my best to identify areas of strength and weakness in the charts to help you kind of navigate whatever the market throws our way. So let's start on the candle chart, because yesterday we were talking about the key moving averages, specifically the 21, and we discussed the difference between using the 20 and the 21 day or 21 week moving average. I personally have been using the 21 for years, and once again it seems to have told the right story for us here. Basically what we were looking at on the weekly chart was that we had lost the 21 week moving average briefly, and I guess I should say we gained it briefly, right? But last week's closed just below it. After the open, we reclaimed that 21 week moving average, and yesterday, after a wick up close to that 2021 mid-cycle top, things deteriorated and we lost that key moving average again. It looks like we're hovering right pretty much on the line right now, give or take a few bucks. But that's why I expected to see a breakdown. Well, I won't say a breakdown, but I expected to see a fake out on yesterday's attempt. And that was because of the weakness here in the 21 week moving average. Now, you see these yellow arrows here. This goes back to a prior analysis a while ago that I want to get into today. And that was the series of death crosses that we had. When was this? This started back in early August, right after we had this massive plummet here. And then we had a series of 1, 2, 3, 4, and a fifth death cross here between all these different moving averages. And obviously a lagging indicator. And we see the price action that kind of followed. When we did an analysis back then, what we determined after looking through history was that really double bottoms have been something that have been very common after sequential death crosses like that. And those bottoms often, or double bottoms often marked the pathway out. Sometimes it took longer than others. Sometimes they led to fake outs, of course. That's the nature of the beast. But in most cases, they led to some significant upside, whether that was a distribution out rally or kicking off the next leg of a market. Each one is a little bit different. And some of the things I want to show you here, you can see all these lines that we just passed through, all these double bottoms going all the way back to 2011. Incidentally, these red arrows here, These are Octobers that were not October. Most of them were, but a few of them were not. As you can see, here's one, two, three Octobers. Let's confirm this one is what I'm saying it is. Uh, let's just confirm that here. This was an October that was red. This was a red October. This was a red October. This was a red October. Point being, October is kind of a myth. Yes, a lot of them happen. And the most frequent ones, in fact, since 2018, they have been October events. Doesn't mean this one's going to be October. However, we do have some good signs that it just might be. One is this developing trend precognition signal. This is on the monthly time frame. This does not confirm until the candle closes, so it's a tentative signal. However, what it's indicating isn't necessarily that we're going to a new high, but it's indicating that we're not likely to go lower than this low, which means that this double bottom should hold in place. So that's a positive sign. If you're looking for silver linings, this might be the analysis for you, my friends. If we take it into the weekly time frame here, we can see where we are now, just inched above that 21-week moving average. But the fact that we don't have any full candle bodies above that level is why I see weakness at this point, right? And you can see on the weekly time frame, we have a down signal developing here, which indicates that price not likely to go higher than the high of this prior candle, which is up at 65,657, right? 65.6K. So that to me tells me that this mid-cycle top is a real issue. It tells me that the 200-day moving average is also a real issue. In fact, we can't even get to the 2021 mid-cycle top until we print above this 200-day moving average, which yesterday we had a rejection from there. So these are the levels that we've got to clear one by one, level by level, to get to where bulls want to be. So where are the silver linings? Here's some more silver linings for you. So we talked about death crosses, right? And we talk about what happens after death crosses. Well, we see a series of double bottoms that have been successful. We also see these key moving averages unwinding, and while a lower moving average crossing below a higher moving average is considered a death cross, when that lower moving average crosses back above the higher moving average, that's a golden cross. And as you can see, the 21 day moving average has already golden crossed the 50-day and the 100-day moving averages. And now the 50-day and the 100-day moving average are approaching a potential golden cross coming up in the not too distant future, as are the 21-day and the 200-day moving average. So if we can unwind all of these moving averages, and that's going to take some time. Sure, the 21 is going to unwind them all, but we then have to get the 50 above the 100, and then the 50 and 100 above the 200. So this is where it could get a little messy, right? And obviously, speaking of messy, look at the situation here, right? The global events that may be impacting the markets right now. We have an presidential election coming up in the U.S. In less than 30 days, potentially some civil unrest after that election, depending on outcomes. And we have, obviously, these hurricanes are an issue. They're going to have some economic impact. And we have just a nasty escalating event happening in the Middle East that could really scale globally. In my opinion, and I'm not an economist, this is just me speculating a little bit. I think the two worst things that could happen economically are that that Israel targets Iranian oil, which obviously could have a global impact. I don't think that has much of an impact on U.S. Fuel prices. However, That oil going to so many places around the world could certainly have an impact on global on a global level. And obviously, the elephant in the room is whether Israel decides to target Iran's nukes, and that's probably escalating as high as you could escalate this thing. So nobody wants to see any of that happen. We all want to see peace as soon as possible. Just a tragedy what's happening there and quite frankly, the innocent lives on both sides are just a tragedy. So in terms of the price action here, uh, I'm seeing this golden cross and one pending, actually two potential pending here between the 50 and the 100 and the 21 and the 200. Um, those are all positives in my opinion. Um, Also, a positive is let's take the small victories at this point, right? And this would be considered a higher high after the sequence of lower high, lower high, lower high, lower high. Maybe after this double bottom, could we potentially be digging out? And could this be our new local bottom here, right? This is the one that's printed, and this is the one we don't want to see a lower low on. But but seeing higher lows off of this would obviously be a positive thing. And if you look at where we have some confluence here around the 62K mark, that looks like a reasonable spot to bounce. Obviously, this 50-day moving average is a key technical support level, and we have double strength in that support with the 100-day right above it. But I like this 62K level, and if we look over on FireCharts, we can see that the market also seems to like the 62K level. We had a bounce from here last night, and this we could call this a short-term double bottom here on this shorter time frame. And so now we see asks stair stepping back up, but this is very strong resistance up here, protecting this 2021 mid-cycle top level, and the 200-day moving average is just below that. So this liquidity really has confluence. I think let's just confirm that here. This is at like 64.5. We have it at 64, 64.5, and up to 65K. And let's see how that correlates with these levels here. This is at 63.5 is where the 200-day moving average is, and then the mid-cycle top is just shy of 65K. So let's see, 63.5. We're pretty much nosing up to that right here at the 200-day moving average. There's not a ton. You could see some of this ask liquidity has dropped down to try and protect that, but it's only about $4 million. That's an easy level to break through or a relatively easy level to break through if bulls can muster the momentum to climb through that. But I don't think getting through it in the short term is going to be much of a problem, but sustaining that level could be, especially if the rejections continue, right? So what's thinning out here? Did this move up or down? Looks like some of this bid support has just disappeared. It could have actually turned into market orders here. As you can see, looks like mega whales had an oops here on a sell and a buy rapidly. Maybe some operator error in that one, but this is not a straight line up, right? So we're running into that resistance here at the 200-day moving average, and the mid-cycle top is sitting pretty much right here. Here's where the 2021 mid-cycle top is. So until we print sustainably full candles above those key levels, look, we're looking at it perfectly. A rejection here from the 21-day moving average happening right before our eyes, right? So where was that one? That's right at 63 and change. So these are technically strong technical resistance. That's not a surprise here, but this is strong technical support. And whether this holds or not remains to be seen. If it doesn't, then potentially we go and retest this for a potential triple bottom. And if we lose that, and God knows there's plenty of catalysts out there, black swans hovering the pond that could bring us all the way down to the trend line. Hopefully that doesn't happen, right? But losing these moving averages would be an indication that that's what's coming. And so I want to go back in history again and look at some of these times where we were getting golden crosses, but they didn't really pay off immediately. And that is obviously in bear markets where this we did see a golden cross between the 21 day and the 200 day and even the 50 day. But it kept running into resistance. It kept sliding above and below that line, and we see things, broke down here. Here was another attempt to break out, a rejection from the 100-day moving average, but we look at the golden cross here between the 21 and the 50, and it never made it up to the 200, right? So this was the breakdown. This was the beginning of the breakdown here in that prior bear market after things had topped out previously, right? So there was an attempt to climb out. There was a bit of consolidation, distribution here. Things broke down, rally back, more distribution, and then the breakdown. So what are we seeing this time around? I think I may have another example of that here. Let's see what happened. Again, a lot of drama in that range, but failed to break above that 200-day moving average. Both the candles and the 21-day moving average never even got close. So what we're looking for is the unwinding of these moving averages. And here we go with an example that the key moving averages began to unwind. The green is the 21, the red is the 50, the blue is the 100, the purple is the 200, right? So we unwound, then the 50 and the 100 unwound, and then the 21 golden crossed the 200, and we saw the other moving average follow for a complete unwinding and a bull market that followed to the 2019 top. That's what we'd really love to see here. Whether we get it or not remains to be seen, right? You can see how the breakdowns, especially past that 200, between the 21 and the 200, those death crosses tend to be pretty painful. Now, here's another example of climbing out. 21-day moving average, that's the green one. It golden crosses the 50. It golden crosses the 100. It golden crosses the 200. And the unwinding of the higher time frame moving averages continues into another beautiful bull run. This was actually after the COVID crash right here. So that's what we're looking for, and we're hoping to avoid one of those nasty prolonged grinds downward. Here's another series of golden crosses that led to this epic run that we've had here from 2023, really from the FTX crash at the end of 2022 into 2023, and a bit of a breakdown. This was not yet considered bull market. This was well, by many, some considered it a bull market. I personally was considering these to be bear market rallies. They kept coming back to support, pretty parabolic here. And then we had this consolidation before things broke out. And look what led the breakout. It was the golden cross between the 21-day moving average and the 200-day moving average. So that's what I am looking for. Might not get, but looking for it right now. As you can see, we're on a pretty good trajectory, but it has to be sustainable, right? These could unwind just as quickly as these could wind back up just as quickly as they unwind. So that's what we're watching for on that side. So let's go to another indicator that I rarely share here. It's something in the MI dashboard that comes with our Premium Plus toolkit at Material Indicators, and that is this global analysis chart that shows the 14-day rolling correlation to BTC for alts. And as you can see here, we have these periods of higher correlation, which tend to mark local bottoms. And, the darker that happens, the better. Obviously, you could have periods of prolonged correlation where we're in a bear market, And we do have this downtrend, this slight downtrend happening here, but we're also showing here, right here, a hint of capitulation. Now, these are not dead on, dead nuts indicators that says, okay, this is it, that's the bottom. This just says we're kind of in that bottomish in that bottomish range, and we've seen this before, as we saw it here when we dipped down to that 54K level, and we saw it here when this was where the double bottom formed, right? So this may be an indication that we have another local bottom forming here, and we'll just have to watch and see how this continues to develop. Back to FireCharts, you can see whales, the purple whales especially, have been buying. That's just today. Let's zoom out a bit and gain some perspective here. So if things break down, right? If things break down and go back to 60K, I'm not concerned about that. And quite frankly, if they went all the way back down to that double bottom, I'm not concerned about that either. I look at that as potential opportunity, right? So don't be alarmed. Don't overtrade. Don't get shaken out. Have conviction, right? If you feel that the fundamentals for Bitcoin are still strong at a macro level, then keep that in mind. If you try and time every one of these pumps and dumps, unless you're really, really good, chances are you're going to be giving money back to the casino. Had something else I wanted to show you. Oh, yeah. Speaking to the fundamentals, we do have economic data coming out. There's speculation over whether the data we're seeing now is skewed or not because of the election. And quite frankly, hey, it might be, but the market's going to react to the data that comes out until there's different data. So keep that in mind. You could be cautious if you want, but the market is reacting to the data that's presented. BTC inflows pretty robust yesterday. So despite the rejection, positive day across the board for Bitcoin ETFs, and perhaps the sleeper flat, dead ass flat for ETH ETFs yesterday. This is just remarkable to me, and really has me considering trimming my ETH position. But nonetheless, the strength remains for Bitcoin at a macro level, and at this stage, that's how I'm trading it. You can see support showing up here on FireCharts now. I'm going to zoom out. Let's go out even further and see if we can see anything new developing in terms of new resistance, new support, liquidity moving around. This remains the local resistance here, especially at that mid-cycle top, that 2021 mid-cycle top, and the strongest support down there at that 50K range. So that's what I'm looking at for the moment. Things develop on throughout the day, but things obviously developing on a daily basis. And if I see things developing through the day, I'll do my best to keep you guys updated. With that, I'm going to wrap it. Hope you guys are gaining something from these live streams and analysis. Of course, none of it is ever financial advice, but I hope it's at least giving you some things to look at and think about as you try and navigate this market. If you like the streams, you find this content valuable, do me a favor, please like, share, and comment. Don't forget to subscribe so you never miss a stream. And the comments, man, I read and engage with each and every one of them. So please keep them coming. With that, hey, if you are in the cone of uncertainty with this hurricane, I wish you and your loved ones the very, very best. Stay safe. Don't try to be a hero. Get the fuck out of there. Okay. I've been through a lot of hurricanes. I know the drill. This one is nasty. Get out if you're in harm's way. And everybody else around the world, there's a lot of unrest going on. Wishing you all safety wherever you may be. And hope you are navigating the market safely. Trade safe, my friends.